Hi, my name's Steve Walker from Promise Money, and in this short video I just want to bring you up to speed on what's happening in the commercial mortgage sector. It's early mid-June and we are coming out of COVID, we hope. But first I just want to address a few myths. I was rudely called by a broker on a Sunday night while supping my gin and tonic and he started talking to me about the fact that the commercial market was closed. Well, that's not the case, and it never has been. Yes, lenders have tightened up, but loans down to £100,000 and less, we're doing them. He thought it was £500,000 was the minimum loan. Investment properties, we're doing them. I would say retail investment, not great, not as easy to place, so not as much choice. And a lot of the high street lenders are still backing off from investment altogether, but there are some that are doing them, and they're doing them at great rates. And if they don't, then the tier 2 lenders, there are tier 2 lenders looking at pretty much all the investment properties as well. Owner occupied, that's really, really strong. So we are placing lots of cases, big cases, small cases, and have all the way through COVID. And it's getting easier, and new lenders are coming to market. To give you, I suppose if you want to look at best in class, recently a firm of solicitors, very profitable firm, looking to move offices, and we managed to place that up to 75% loan to value, which is something we haven't seen for quite a while, and 2.5% over base. So really, really good deals for the right businesses. The health sector, that's booming. The high street lenders are really looking for those products. But it's not all about the high street lenders, and we have to be creative because affordability is always king, and the high street lenders will always have a higher stress test on the interest rate. They'll probably want more coverage as well. So whereas let's take a typical investment where some lenders might say we want 125 or 130% coverage on the rent, your high streets might be saying we need 1.75. There are some who say we need 2.5. So we have to take that into consideration as well. But we have got plenty of tier 2 lenders, and we can be creative with regards to the affordability situation as well. For example, in owner-occupied businesses, we see quite a few businesses, sole trader businesses, where they've taken all the profit out of the business, which leaves very little if they want to expand or if they want to buy premises, because all the profit's been taken out. There's nothing there to support the loan. But even with high street lenders, if we can demonstrate that they took those dividends out because they were there, not because they needed to, then we can add some of that back by just showing what their current outgoings are at the moment, personal outgoings, dividends weren't needed, add those back into the profit. So we can be creative on that from that score. Also, there are lenders that will do interest only, and they'll do the loan over a long term, even though you're not taking it over a long term for affordability purposes. So again, quite a few options there. And as we now come out of COVID, the obvious conversation to have with lenders is, well, how are you viewing this business which was successful, has taken an absolute hammering on their accounts in the last 12 months, but has every reason to be successful again in the future? And you could expect a lender to say, well, we need to see 2 years good accounts, but I don't think that's where we're at all. They want to see that business has recovered. And depending on which lender you talk to, it's, well, what does recovered mean? And I think the high street lenders are definitely going to be looking to see a good number of months, as will some of the tier 2 lenders, a good number of months where we can demonstrate that the business has recovered back to its previous trading, or at least to sufficient trading numbers to be able to support the loan. So it's a cross between what's happening on the ground right now and a projection. It's in that sort of area. But there are other lenders who don't need quite so long, three months, and then there are some, again, you pay a little bit more for it, tier 2 / tier 3 lenders, where they'll say, well, look, let's see what the accountant's got to say. And if the accountant can justify the story of where they were, what has happened to the business and how they've overcome it and they're back on track, then there are lenders that will look at that sooner without having to wait for a long, long time for the numbers to come back. So just to give you some examples of some of the loans that we're doing at the moment, I mentioned the solicitors, that was a £500,000 case, great. Care homes, 1.2 million. Recent one, somebody wanted to buy a supermarket shell. It was a community centre, and it was pretty much stripped out, but would convert to a supermarket. and because they were already in the supermarket game and had some other businesses around and they had income to support it, then we had high street lenders looking at that and saying, okay, well, we can see what they're looking to do, and we've got income coming from the other businesses to support it, so that's the sort of thing that we can support. So there's plenty of common sense still out there. Lenders are not running a million miles away from common sense deals. Development exits, some nice big chunky deals on those as well. So I suppose where lenders are going to be taking a closer look is going to be businesses which have been hit by COVID and obviously haven't recovered, and it's going to be businesses which are letting property to businesses that have been hit by COVID and obviously haven't recovered, and that's going to tend to be the retail sector, maybe the leisure sector, and of course they're always going to look at the length of leases as well, just to see have those got longevity. But not all lenders are banks, not all lenders are as picky, and we have a wide range of specialist lenders as well who can look at this quirky stuff and make some common sense decisions. So if you've got commercial inquiries on your desk, don't think you can't do anything with them. If you've got your customers talking to you about commercial loans, don't bat them away. We can pick those up and run with them, and if necessary, talk direct to your clients and help them on their way. So yeah, have commercial on your radar. It never went away. Wasn't great, but it never went away, and it's starting to come back. And if you want to catch up on the video that I did previously on this, which talks a little bit more about affordability and how lenders look at affordability, I think there's a little thing you can click there which will take you to it, or there'll be a link underneath this video where you can go and have a look at that too. So I hope that was a useful update. Commercial is here. We are writing lots of commercial business, so do get in touch. Thanks a lot.